higher gain. So you can see we got in that trade one for a buy. We got in for trade one at a buy right here. The trade one for a buy. Make it clear. Trade one buy. Right? They would have gotten for a buy right here. As you thought price, once price was making this higher high, broke past this consolidation at take profit one on February 7th. You see a break past this consolidation. You see 3 yellow candlesticks pushing all the way up to take profit 2 from 1811 all the way up to 1824, depending on your lot size. Easily could have been from 1811 all the way up to 1824. Could have been a couple hundred, couple thousand, 50 grand, 20 grand, depending on your lot size, easily. Once price gets to this higher high, though, it stops. Once price gets to a higher high and stops making higher highs, this lets us know that this downtrend is no longer in effect. And, we might be seeing price consolidate and head back down and retest back down before heading back up in the overall direction. So we have to put everything together. Like, your psychology has to be right. And you got in for a trade for a buy at trade. You got in for a buy at 1823, 1822 on February 7th at take profit 2, just above take profit 2, and it heads back down to take profit 2. 1817, 1815 area, our psychological area, before pushing back up to take profit 3, all the way back up to take profit 5. So the main reason why people are losing in Forex because you entered for a buy at the top of an uptrend, at the middle of an uptrend, and you didn't wait for price to retest back down. You have to wait for price to retest back down, make a higher low, and then you could have gotten for a buy at Great Trade 1 and Great Trade 2. Wait for price to make a higher low. Wait for price to make, boom, a higher low, and then you could have gotten for its higher high all the way up to take profit 5. Like, wait for price to make a higher low, and then you could have gotten for this buy at Great Trade 1 and Great Trade 2. You could have entered for an entry. As we're going over entries, this is the main reason why people lose is because you enter, it's because of entries. They enter at the wrong area at trade 1 for a buy, and it heads back down to Great Trade 1. And then you could have got in for a buy at Great Trade 1 and Great Trade 2. And you could have swung traded this from take profit 1 area, 1814, 1815. 1817 take profit 2 area, and once the swung traded this all the way up to take profit 5, all the way up to 1836, depending on your lot size, 20,000, 50,000, couple thousand, So this is one of the main reasons why people lose, because you have to find entries. You have to find better entries. The entries that you're getting in at right now, game, are still not the best entries that got in for a buy right here. Trade 3 buy. Put buy, trade 3 buy. You're lying for a buy right here. Thinking price is going up. Seeing this yellow candlestick from 1802 all the way up to 1805, and we got it for a buy. And price, you see black Marubozo candlestick push price down, and we got him for a buy at trade 3, and it shoots all the way past all our trades and gets you out, and now you just lost all your money. The main reason why people are losing is because of their entries. So you have to find better entries. You have to wait for the right setups and understand that understand that entries will take time. And so you can trade. You have to understand entries. You have to understand, like, you want to get in for an entry at the bottom. That's where you make the most money at. And wherever you enter at is going to determine if you're going to make a lot of money or if you're going to lose a lot of money. If you're potentially going to lose or win, wherever you enter at. So extremely important to understand. You enter at the middle of a downtrend. This is a downtrend. See this bearish engulfing pattern. It started here at 1810, made a lower low all the way down to 1805 before buyers try to push price back up, and it did. To all the way to 1808, and then we see this bearish engulfing pattern. The price was just consolidating that here, but it did make a lower low from 1810 all the way down to 1805. Then it pushes back up. We see a bearish engulfing pattern. Once price breaks this trend line, we're in the downtrend, and and you're looking on a 15-minute candlestick and you see price, you see yellow candlestick pushing up on a 15-minute candlestick. That's why sometimes it's better to look at the 1 hour to see what price is doing on the 1 hour. And you see black candlestick, you get in for a trade for a buy, and price, you see a black Marubozo candlestick push past all your trades, past your trade 3 for a buy, as you thought price was going to make a higher high, and it's moved and it happened until the next day. As price, goes all the way up to take profit 1. So extremely important to understand. This is for your psychology, as you have to find better entries when it comes to Forex. When it comes to entries, you have to find better entries. You have to look for the best entries. You have to be patient with this market. As you know, where you enter at, it will determine if you make a lot of money or if you lose a lot of money. In your lot size, how much money you was risking will also determine if you're going to make a lot of money or you're going to lose a lot of money. So entries are extremely important. Where you enter at is extremely important. You can see we're in an uptrend still. Where you enter at is extremely important. Same thing here. You got in a trade 1 for a buy. After you've seen price go from 1812 all the way up to take profit to from 1812 at take profit 1 all the way up to take profit 2, almost to take profit 3, and you thought price was going to keep going higher, and price is going to have to keep going. And you can see price will make what, a higher low, higher high, then what, a higher low before making a higher high. Like structure, understanding structure. That's all for your psychology. Price will make a higher high before making a higher low before making a higher high. Same thing back in this picture again. On a 1 hour, price will make a higher high and it's going to keep going up. It's going to make a higher low before making a higher high. So when you enter at the middle of an uptrend, where you enter at is extremely important. As you can see, once you enter at the middle of this uptrend for a buy, price reverses back down, gets you out this trade from 1823 all the way down to 1815, and gets you out of this trade depending on your lot size, or you're in the negative depending on your lot size anyhow. So focusing on just becoming a better trader, focusing on making better entries, is how you become successful over time. So we're going to focus on the entries and keep focusing on entries so you can become more successful over time. Since I know you know how to trade now, we're gonna focus on entries, as entries are extremely important. This is another reason why people are losing money, because you're entering at the wrong area. All right, gang. So you can do whatever you want. You can do whatever you want, gang. You can do whatever you want. There's no limits to how successful you can become as a trader. So entries though are extremely important. So where you enter at is why you're losing money. You're entering at the wrong trades. As you enter for trade by 3, you're trying to swing trade this, and prices shoots all the way back down, gets you out of these trades. Trade 1 to trade 2, these trade 3s, even here too, gets you out of this trade. Price making what, lower lows and lower highs and lower lows and lower highs and lower lows, like market structure. So just putting it all together as we go to the 4 hour next. So you have to be patient with, as price will just keep going up and up and up. As you see it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like a whole day from February 7th to February 8th for price to go back up. February 8th, all the way back up to February 9th, all the way back up to take profit 5, 1813. So you have to be patient with price, as price will stop you out of this trade, and your broker will take all your money. As you enter for a buy and price sold all the way back down. As you enter for a buy, boom, for buy right here, trade 3 for a buy, and price sees this black Marubozo candlestick and shoots you out of this trade and sell and gets you out of this trade. So you want to find the best entries, and you want to be aware of just getting in that trade 1 and trade 2, just getting in impulsively, as your broker will stop you out, and you thinking your broker is against you and everybody's against you. When you enter the trade wrong, when your psychology is still a little bit off, and that's why we're doing all these videos for your psychology. It's extremely important when you interact. This is the reason why people losing money. You have to be patient. You make the most money at the bottom, and then you could have rolled this all the way up to the top, all the way to take profit 5. You see on the 1 hour overall direction more clear. All right, gang. So extremely important to understand. You have to be extremely patient. I know it's hard to identify entries. And we'll talk more about that in the next video. All right, gang.